Welcome to Biz Dev Live. I'm so excited to bring you Ardal Powell today. We're going to be talking about business, your business, and how to do it smarter, how to treat it like the financial instrument that it is. I got to say, over the last 10 years of running Toth event staffing, the biggest hindrance to my own success is my own financial management of the company. While I've been able to turn a profit, taking that money and actually using it wisely has been a very challenging part of my life. If you relate to that, or you're thinking about starting your own business, or you're in the beginnings of your own business, this is going to be a great show for you. Stay tuned. I'll be right back after the Biz Dev theme with Ardal Powell.
Biz Dev Live, Biz Dev Live, weekdays at 11 Eastern Time, live. Biz Dev Live, Biz Dev Live, weekdays at 11 Eastern Time. Leadership and motivation, empathy and inspiration, Biz Dev Live, Biz Dev Live, business development, not even selling it. Biz D with C, brought to you by Cameron T. Biz D with C, brought to you by Cameron T. This is business development, not even selling it. This is business development, not even selling it. Biz Dev Live, Biz Dev Live, Biz Dev Live. This is business development, not even selling it.
So I'm excited to introduce you, Ardal. I'm going to bring him on screen here. Ardal, thanks for being here. We got, I'm going to just go through your bio here. Long and varied experience in management, innovation, and research has given Ardal Powell a vast toolkit of insight on money and strategy. In roles in manufacturing, publishing, and financial services, a career spent questioning received wisdom and finding answers to new questions makes him an essential member of the professional team every business owner needs for advice and support. Please welcome to the show the amazing Ardal Powell. Doctor, you got degrees on your name. I want you to talk about all that. Welcome to the show.
Thank you, Cameron. It's great to be here, and I love your theme song. That was
thank you. We get lots of compliments on the theme song. So tell us a little bit about what you're doing now. I want to get into the background and why you were excited about getting the degrees, but let everybody know, if people don't know you, your accreditations, what you're currently doing to help people.
Well, that's very kind of you. The accreditations are really not relevant. What matters is my lived experience as a business owner myself. What I do is I really coach business owners to get clear about their financial goals, and I give them financial strategies to achieve them. And the reason I've chosen that path is because as a business owner myself for close on 40 years, there was a lot I didn't know. I didn't have a team of professionals around me to support me and show me how to maximize the value in my business. And boy, I wish I had. If I can save other people from making the mistakes that I made, then I feel like my mission is accomplished. So that's what I do, and it's really that lifetime of business experience behind me that matters in doing this work, more so than the sort of letters after my name type of achievement.
Absolutely. And I know you're saying the accreditations aren't a big deal, but I know it takes a lot of time and it takes a lot of effort, and it certainly adds to the mass amount of experience that you have. I know within different industries, there's people that don't take the time to get some of those certifications and degrees, so it's a big deal. So I'm gonna shout you out for it, congratulate you on it, and I just wanted to make sure that people's pointed out, because you're very humble. Just got the Ardal Powell on the screen. You're not typing out the 4 different accreditations that are attached to your name, but it's a big deal, and I want to highlight it. And I think it's a big thing for folks that are especially starting out in their career getting some of those step ups and things that open doors of opportunity is always a big deal. Certainly encouraging my young children to go down that road and that path. What got you excited about business ownership? What got you passionate about the financial services industry? Why did you pursue education? Talk to us about your story, kind of where you came from. Just sort of add a little bit of texture and color to your life's journey.
Oh, okay. So, well, in the first instance, I did studies for the same reason that Hillary climbed Everest, because I could, because they were there. When I was growing up in England in the 1970s, university education was pretty much paid for by the government. So I was fortunate to get a place at University of Cambridge that came with hardly any cost to me or my family. So I realized that was a huge privilege and an amazing opportunity. I studied English literature because I was good at it, and I thought they might be kind enough to give me a degree. I then went away and I went to graduate school in Holland to study music performance, and then I started a company making musical instruments and moved to the US. During the course of that time, I was doing my own research about the history of instruments and performance practice, and I published some stuff. And
I
friends
just
of
want
mine,
to highlight stuff. I don't want to distract from your story because I want to come back to you publishing stuff. But this is one of those things that I'm often encouraging young people, especially, but for folks wherever they are in their journey, it doesn't hurt to become knowledgeable and get a degree in a career track. You may not want to do that specific thing for the rest of life, but it opens up doors. And especially when you're talking about entrepreneurship, there's no better way to create a medical device or go into the medical industry than to get some medical knowledge. There's no way to, better way to get into the music industry selling some of the tools. And for anybody that's within the business sector, there's a couple of different ways you can do business. You can be the guys digging for gold, or you can be the guys selling the shovels. Selling the shovel is not a bad gig. So understanding that, every industry has different ways to make money in it, and you should be looking at those things because especially as you get more experience and capital, you can take advantage of both sides of that equation. You might not be able to shell the shovels and do the digging in the beginning, but later on, your industry, your business, you may be able to not only create shovels for your own folks, so you don't have that cost. You're essentially paying yourself, but then you can also take advantage of that opportunity within the industry to sell to others. And I love examples like that because it shifts people's thinking on their own business. And I know for me, certainly one of the biggest lessons going into the pandemic was, we were just really solely operating within one kind of income driver for the business. And especially over time, you want to bring in more income drivers. You want to take advantage of the moat that you're building. Warren Buffett likes to talk about that with businesses he likes to invest in. Some of the opportunities there. You can create some of these beautiful income drivers for your business where other businesses, they couldn't do that from the start because they don't have the capital, they don't have the experience, they don't have the customer relationships or B2B relationships there. Sorry to distract, but I love points like that. So talk to us. You got into the music industry, you started publishing some stuff. Go from there.
You've anticipated kind of where I was going with that story, which is that the research I was doing was self-motivated. I was learning how to find stuff out, basically. And every business owner needs to do that about their own industry, their own position in the industry, their market, all those kinds of things. You need to be able to find information and test it and evaluate it and see, what use you can make of it. So I did that for a number of years, and I published a bunch of things. And it really, again, it doesn't matter so much what the publications were about. It was that I hit a level of credibility with those publications that people said, oh, this guy knows what he's talking about. in this small area of music history. I had friends that I'd studied with who said, this is doctoral level research. You should get credit for this. And it turned out that the university had a rule that if you'd done your first degree there, you could submit published academic work in fulfillment of the requirements for higher degrees, including PhD. So I did that, and I had a examination and all this kind of thing, and they gave me this degree for doing what I would have done anyway. I didn't do it to get the credit, but it was kind of a validation of the fact that I knew how to root out information that was hard to find. And so that became really another part of my platform as to who I was and what I bring to the world. And I use it today because I'm working with business owners in all kinds of fields, and understanding how their business works internally is key to helping. So that's why I put research as one of my main capacities in my blurb, because it's all about digging up the right information.
And it's it's a problem-solving skill as well as a research skill, right? Figuring out the right questions to ask, and then figuring out the right places to go, and then being able to do the legwork, which for a lot of people, they would be frustrated, bored, and not excited about doing that work, which you can, if you're a great researcher, get just paid for research. And certainly the financial industry pays a ton to analysts all over the place, because the folks at the top of these pyramids inside these financial companies, they don't enjoy doing the research, and so they have other people do it for them. I love it.
Good point. Yeah. Sorry, go ahead.
No, I was just going to say, continue on here. So you talking about sort of getting to these points within your business. I also love the point that you're making. I was doing this work, and that's something that I've really not taken advantage of in my own life as much as I'd like to. Certainly trying to give that guidance to my children. But you can be doing this work and earning these degrees at the same time, and just take advantage of I don't know what you want to call it, overlapping opportunities where you can benefit multiple times from the same amount of work, and kind of compound the benefits of your labor.
Yeah. On that topic, I actually just earned another certification. I was thinking about the summer, making some changes in my practice, hiring an assistant, getting them on board. And I decided to take another certification over the summer as well. So I have another set of letters after my name as well, probably next week.
So what's this newest certification?
It's called FSCP, Financial Services Certified Professional. And the reason I did it was to dig deeper into some of those specialized kinds of knowledge that business owners need.
And so just tell everybody all the certifications that you hold.
Well, my first degree is an MA from Cambridge. It's an undergraduate MA. My PhD is in music history. It was in a unique field of music history, history of instruments and performance style, combined as one topic. I went out and got a CLTC a few years ago, which is a certification in long-term care insurance. And the reason I did that was twofold. I was working with a lot of clients for whom it was a really big concern. You're planning to live 20 or 30 years in retirement, and 70% of 65-year-olds are going to need some form of care for non-medical custodial care late in their lives. And so it's really important to plan for that.
Right.
Second reason was my own parents needed help. My dad was in a home for the last 4 or 5 years of his life. And my mother had a program of care delivered to her in her home for her last decade. And my brother put that in place. I couldn't really do anything to help. Here I was 3,500 miles away. And he was hiring aides and giving them their marching orders and paying them and all this kind of thing. And I realized it's not just the money, it's the administrative burden of looking after an elderly relative that you have to make some provision for. So I went out and got a special certification in this because it was one of those things I needed in my toolkit to help most of the people I work with. And
Yeah,
then
that's really important.
FSDP, as I say, I did that over the summer um, to sharpen my skills with business owners on the nitty gritty of financial planning.
All right, so let's get into the nitty gritty of today's show. What are some of the lessons that you've learned from business ownership and financial management? I want to give people some stuff here to walk away with, where they have some more tools in their toolbox. Just briefly, what have you kind of learned over your work experience in business ownership over the last 40 years?
Okay, that's a great question, Cameron. I think all business owners see their business as being unique and unlike every other business. And we're told to think that way by marketing people. What makes us different from everybody else? And that was certainly my case. I was making a very specific class of musical instruments for a very small market that was distributed all over the world. And I thought, well, this is completely unlike any other kind of business. But what would have been helpful was to understand how my business was like every other business, and how like every business is like an investment. Um, the business is there to produce value for the owner or owners, either in real time or sometime in the future, or a combination of those. So you want to do at least two things with it. You want it to grow, and you want it to produce income. Now, in financial terms, those are conflicting goals. If you want to do one really efficiently, then the other one's going to be compromised somehow. So learning to think that way about a business is the first step in designing a plan to make it financially successful. Okay. So nearly every business owner I've ever met is in the habit of recycling profits into the business to avoid current taxes, right? You write off as many business expenses as you can to lower your tax bill.
And say that a little bit louder and a little bit clearer for folks in
Okay.
terms of the recycling of profit, and
Yeah.
talk about in terms of, is it something people should be doing, not be doing? What's the benefit there? Because I think that's an important point.
Okay. Great. So I'm running the AP widget company. Okay, and I made 1,000 widgets this year, and my break-even point was 850 widgets. So I've got an extra income from 150 widgets that are surplus to what I need. How am I going to deploy that income? The first thing my accountant's going to tell me is buy more raw materials, buy more equipment to lower your tax bill this year, right? So I'm increasing the value in the company, I'm turning that income into capital, and I'm avoiding paying taxes on the extra 150 widgets. Make sense so far?
Yes.
Okay. So the thing about that is, if you think of it in the way an investor would think, what you're doing is investing in the company with pre-tax dollars. Now, for a business owner, they may not even think that's an option. But for an investor, it is an option. Am I going to invest with pre-tax dollars or post-tax dollars? And how should I diversify those two categories of money for my best advantage? Nobody ever goes to the accountant and says, I bought some equipment in my company with pre-tax dollars. They just think, I got a write-off this year. So somewhere down the road, you're going to turn that business value into income. What happens at that point? There are taxes due at personal rates. And you don't have the shelters any longer that the business provided to keep you from having to pay those taxes. So having that long-term strategic view can help you decide, when you sell those extra widgets, what am I going to do with this money? Am I going to plow it back into the company the way everybody else does? Or am I going to find a way to set it outside the company in some kind of a tax-sheltered vehicle where I can get at it when I want to, put it back into the business if necessary, but it's not on the IRS's radar any longer. And I can maybe find a way to grow it, diversify my risk, so not all my eggs are in one basket in the company,
And
Um,
what's an example of a tax shelter for those that don't understand this thing? Because I certainly don't have a great understanding of it, so I'm on the edge of my seat here. But also, what because that can sound shady, right? And I think that one of the things that's helped me in recent years is just understanding exactly what you're talking about, pre-tax dollars versus post-tax, right? Because I pay myself for my company. I have an S corp. I was talking to my financial advisor about the different advantages of C corp. I got to continue to have that conversation with a CPA, finding out what corporate structure is best for me. But I've definitely taken advantage of corporate structure, which if you're running your business as a DBA, doing business as, and you're doing it under your social security number, I say it all the time on the show, but the wrong way to be doing it, right? You want to take advantage of the corporate tax laws if you have a business that's producing income, right? What is an example of a tax shelter, and when should you be utilizing something like that?
well, that is the answer to those questions. Is it's going to depend on the situation of each.
Of course.
I can't get into the nuts and bolts of how these vehicles work for compliance reasons. I have to put everything I say about those
Right.
through a review process, and it's very strictly regulated, especially.
And I got to say, thank you for coming on the show, because there's a lot of financial professionals out there, and I think this is something that you could say that's probably going to be helpful to other financial professionals, because they're nervous, right? They're nervous about getting on and getting into trouble. You're on this show, you're talking about it. So I think a great bit of advice for other financial professionals that might be looking at this or wanting to get into the business. How do you do social media? How do you go on a show like this, talk about things, and not get in trouble with the compliance department, right? So I don't know if you want to just speak to that real briefly and let people know, how do you do that, right? How do you work within this industry and not get in trouble?
So that's a great question, Karen. The first thing is, don't talk about product. It's not allowed. You asked me,
which is why we're not going to talk about tax shelter,
I
because that's a specific product. So you're going to want to talk to a financial professional like yourself offline, and then they'll talk about some of these products that can be offered to you.
And the other thing is, I am trying to make clear that I need to be part of a professional team that every business owner has, that includes a CPA who's qualified to give individual tax advice. I'm not qualified to give individual tax advice. I can give a general education about that. And by the way, don't let me forget to talk about Section 199 Cap A.
Section, say it again.
I'll come back to that. But
okay.
The thing is, you need a CPA, you need a business attorney, specifically a business attorney who understands contracts and agreements and that kind of thing. And you need a financial guy, a person, who can do some of that creative, long-range personal planning with you, so that you can see outside the black box of the company. You're not just looking at the internal workings of the business, but you're asking at every stage, why am I in this business? What do I want it to do for me and my family? What's my exit strategy? Really important question to ask early, and not enough people ask it.
Right. I know I didn't.
It was one of my mistakes, in the instrument making company. I and my then partner left a lot of value locked up in that business that we could have recovered for ourselves if we'd had the right mindset early on. So again, learning from mistakes is really important in my story.
Some of the best learning for just about anybody, which is why, especially for youngers, and I don't know where you stand on this, but for me, getting involved in business ownership, asset development from a very young age to take advantage of time, compounding, the lessons that experience brings that allows you to make wiser, more informed, more complex decisions where you are developing this team, right? You're building because no man is an island, right? Nobody can do it completely on their own, and so you're always depending upon people to help you out, give you the guidance necessary, specialists like CPAs that can give you that tax advice for your particular business or situation, all these different things that really, I know for me, developing those relationships has been very challenging and very difficult because it's very difficult to know who you need. And typically, you're not running out and getting help until you absolutely need it and are desperate for it. And that isn't necessarily smart either, right? You want to try to find folks when you're not in desperate need so that there's time. You can find the person that's really going to care the most and deliver the most value to you based on your individual situation, right?
That is a super important point, Cameron. That the best time to do planning is when you don't need to. Because, really, because when you're in a crisis, it's too late.
Don't shop when you're hungry.
Yeah. So often, first of all, you're not in a calm enough mindset to do it well. And secondly, you've probably closed off a number of options you would have had if you'd thought ahead and done it earlier. And if there's one thing, that's the most important takeaway, I think, from this conversation for everybody, is that plan when you've got the time and when you don't need to. Because if you don't, you'll miss the bus.
I think that's big, especially when it comes to financial planning. It seems more than anything a time game. The building of assets. It just becomes easier the earlier you start in terms of actually being able to level up and build that next thing, because time is always a part of the equation, and it almost never works better for you to have less time than more time, right? I think it's just one of those things, right? So let's get into the go ahead.
Let me just jump in with one more thing about time, because
Absolutely.
I referenced Section 199 Cap A. That is going away in 2026. It's part of the 2017 tax law, and it affects everybody who is a sole proprietor or has an S corporation or an LLC taxed as an S corporation, so-called pass-through entities. And all I'm going to say is anyone who has one of those entities, call your accountant, ask them about Section 199 Cap A, or it's also called Qualified Business Income Deduction, or the QBI deduction. And if you have not been using that exemption since 2017, you may want to file amended tax returns for the past few years, because it's a hugely valuable deduction that business owners can use not only to get out of current taxes, but also, if you do the right thing with that, with those funds, you can have permanently tax-free growth on that money. And that's never been possible before. You always are going to end up paying tax on money you invest or money that you liquidate. This is a case where you can put money into vehicles and pay no tax going in or coming out. So it's a really important conversation to have with your accountant, and not all business accountants are even aware of that value. So give them a call, and if they're not doing it, ask them to look it up.
All right. So I just asked our viewers, I just put it up on the screen, write it down, put that note, put it on the wall, so that when you have that conversation with your accountant, with your tax professional, you can bring it up. Review tax code section 199 Cap A in terms of your exemptions for your pass-through corporation. I run an S Corp. A C Corp is not one of those organizations. And I was just told recently, one of the nice things about a C Corp is that if you're paying yourself and you're not doing sort of the pass-through payments that happens a lot with sole proprietorships and S Corps and that sort of thing, the corporation can hold on to the assets without the same sort of tax structure where you're being taxed on whatever's left over. The business gets taxed rather than you, so that your business dollars, right, which, if you're a sole proprietorship, if you're paying taxes after you've been taxed already, you're paying taxes with what you were talking about before, post-tax dollars versus paying taxes with pre-tax dollars, money that may be in your organization, not in your personal bank account. So it's one of those things that you can look at to sort of protect and hold on to your funds if that's the right move for you. We got into that conversation talking about things like, having the company owning mutual funds and stocks and that sort of thing. And so what's the advantages of that versus holding on to those personally if you're trying to build assets for your business, like many companies do, right? So you'll hear about lots of companies, even something like Tesla, Elon Musk getting into the business of holding on to assets within Tesla, like Bitcoin. What is Tesla doing, owning assets like Bitcoin? But that is something that they have a large amount of money in their coffers, and so they can use that money in lots of different ways to grow the assets of the company, which I think everybody should be practicing to some degree, because you want your company to grow, to be able to buy more things, build more business, like you were talking about earlier. As your business builds assets and wealth, that only benefits you down the line. And if you can do it in a way that benefits you pre-tax dollar wise and all that stuff, it just makes sense and makes sense and makes sense on top of makes sense. Compounding makes sense. So anyways, let's continue here. Ardal, you talk about in your takeaways that we want to leave people with, your company is likely your most valuable asset. So talk a little bit about that.
Okay. Well, if you ask most people what their most valuable asset is, they're going to say my house, my retirement portfolio, that kind of thing. They're thinking of something with an account number or a physical address. From the financial services perspective, for most people, their most valuable asset is their earning potential, right? If you figure out what you make in a year and you multiply that by the number of years you have left to work, if you're anywhere in the middle of your life, that's a very large number. Most people are surprised by how large it is. That's the beginning insight of a protection strategy on which you can build a financial plan that suits a particular individual, because it's going to be different depending on how old you are and what your earning capacity is and so on. But in the same way,
you're hitting that mic, Ardal. Just be careful with that mic. I think you're hitting it. So just
sorry. Yeah. So really, it's the same equation with a business. You're thinking of future earning potential over what might be more than an individual's lifetime. I mean, if the business is set up a certain way, and if it's the right kind of business and it can be sold or continued by others, then that earning potential is pretty much indefinite. So that's why I say it's an important realization. That's the stepping off point for a strategy. Most business owners I know, and I believe the statistic is fewer than 40% of small business owners have a written exit strategy. Most people think, I'll get to the end of my working career, I'll think about retiring, and I'll sell the business. And you ask them, well, who do you think is going to be interested in buying the business? And what do you think they would want to pay you for it? And that's when the questions start to emerge. Well, maybe I need to have a plan about this. Maybe I need to get the business into the shape that someone would want to buy it when I want to retire. And I'm not encumbering it with things that make it undesirable or inefficient or unattractive in ways that will lower the potential value to
so what are examples that make a business? Obviously, there's a wide range of businesses that people can have here, but I liked what you were talking about in the beginning, like, the idea that everybody thinks their business is very unique, but there are certain fundamentals to any organizational business, right, that make a business valuable for whatever reason. What are some things that make a business an actual asset that somebody wants to own versus a liability that nobody's going to want to touch with a 10-foot pole?
Terrific question. The first one is where's the owner? Is the owner and the business, are the owner and the business the same individual? In other words, if I make all the widgets myself, and I have special skill in widget making, and I'm known all over the world for my widgets, and people beat a path to my door to buy those widgets, and they'll pay me anything I ask, and I want to sell my business, I'm probably not going to find a buyer, because the business owner is going to have to find a replacement for me. You see where I'm going with this?
Absolutely.
I need to make myself dispensable to the business before the business is an asset that can be sold. So I need to find, maybe train a young widget maker to take my place. Maybe take them on, teach them everything I know, teach them how to run the business, and then sell the business to them in return for an income stream that will last the rest of my life. That would be a good strategy for a highly skilled widget maker. If on the other hand, your business is not dependent on individual owners, if you have employees that you have good retention rate, they've stayed with the company a long time, they know what they're doing, you don't have a high turnover rate, that's an attractive business for an outsider to come in and buy, because it's self-sustaining. It has a good prospect of being able to run into the future and keep producing and keep being producing value for the owner. So that's really that's the first question, and a lot of the other questions grow out of that one.
I love that, and you can talk about, you look at a company like Apple, and there's a reason why it's one of the most valuable companies in the world, because they've done exactly what you've talked about to a large degree. They have an amazing customer base. They have longtime employees. They're innovating, and that's all done regardless of who's CEO. Even though that they've their value is definitely enhanced by having a long running CEO. But it's a publicly traded company, that kind of thing. With any company, you look at it and you say, well, what assets does this have? Do they have large cash reserves? Do they have a way of making money year over year? Are they diversified? Are they into some different things? And so for you, when you're creating the structure of your business, to think about things like that, how are you building an asset for yourself? I was having the conversation the other day, is, my intention is to create that company where I can walk away, and then why would I want to sell it? Because at that point, it would be something for me that is going to continue to bring revenue. Now, you have this second talking point here. Your company is likely your most valuable asset, and so too, as such, is subject to the same risk, reward, growth, liquidity trade-offs as any other financial investment. And so, if I have an asset that's making money for me, so I own a particular stock, it's going up over in time, why would I part with that stock if I know it's continuing to go up in value? And so there's lots of different reasons somebody will sell a successful stock. You may see in the future this isn't going in the direction that you want to, and that might be you just don't want to commit the same amount of time to it. Maybe somebody's offering you multiples on the revenue that you would generate over the next 5 to 10 years, and it just looks like a good deal. And why not walk away and start something new and enjoy the fruits of your success, the sweat from your labor, right? So talk to us about this treating your business like a financial investment.
Great. Well, you teed that one up really well, because talking about stock prices that increase year over year, really sets up the distinction between the way most business owners think about their business and how successful investors think about financial assets. And what I mean by that is this. What's the first rule of investing, would you say? You can say
don't get your heart, don't get your emotions tied to it, right?
It's 4 words. And one of them is buy and another one is sell.
Oh, okay, I got you. It's buy low, sell high.
Exactly. So what that means in practice is that stock that's appreciated in value is something that is ripe for the second half of that statement. Okay. So let's look at a real world example. You have an account with 3 sub accounts in it, and they each have a third of the money in them at the beginning of a period. 6 months later, one of them's gone up to, let's say, 50% of the account value. One of them's dropped to 20%, and the other one stayed the same. That math doesn't add up, but never mind. Right. So what are you going to do? Most people are going to say, I'm going to get out of the stock that's declined in value and buy more of the one that's gone up, right? That is exactly the wrong thing to do in line with this mantra of buy low, sell high. Because over the long term, the efficient strategy is to sell some of the stock that's appreciated and buy more of the one where the shares are cheaper. Because you're going to buy more shares with the same amount of dollars. So your cost per share goes down. And over time, those assets are going to change position in ways that are unpredictable. But that's what buy low, sell high means in practice. Selling appreciated assets and buying ones that are undervalued with that money. Over time, that strategy can be mathematically shown to have better outcomes than ones where you put money into assets that are overpriced, even if they're increasing dramatically.
People like to bet on winners. They like to see something that's going up. You don't want to bet on something that's not going in the direction that you want to go. And I think that's where the research, the analysts come in. It's understanding, okay, this isn't doing so well right now. How do I read the future? How do I understand that something is likely to go up into the future that's technically a good deal, right? And that's what everybody's looking for when it comes to stocks, is a good deal, right? You're getting something that is at a low price and is going to take off tremendously. It's going to double or triple in value versus something like, maybe Apple's a terrific stock. It's not going anywhere. They got huge cash reserves. You can put your money in it. It's going to go up over time. But is that going to go up the same percentage as a more volatile stock right now that's at a lot less money? That's a challenge. And I know it's a challenge for me. I know it's a challenge for folks. How do you manage, or what's the general worldly advice on managing that risk?
Okay, great question. This is perfect, because picking winners is a way to expose yourself to maximum risk. Diversifying is a way to manage the risk. Putting money in an asset allocation that fits your risk tolerance, your time horizon, other values and goals that you have as an investor, and not paying too close attention to what's going up and what's going down on a particular day. Now, you mentioned volatility. When you're investing for growth, volatility is actually not such a bad thing. If a price drops, that's a buying opportunity, because you're buying shares below what they're going to be valued at in the future. And unrealized gains are just that, they're unrealized. The same as losses. They're only realized when you sell something. So volatility is actually, people are scared of seeing stock graphs that swing around a lot, but that's only really a problem when you're ready to sell, because in that case, you're depending on a market. You have to find a buyer for the shares that you want to sell, and they're not going to pay you more than the market currently thinks they're worth, which may be less than you paid for them. So when you're liquidating, volatility is a problem. When you're investing for growth, it's really not that much of a risk as it is in the later phase. Does that make sense?
Absolutely. And when you're talking about the business aspect of this, so how do we bring this over and sort of look at this from the business angle? I have my business or businesses, which for anybody that's in the entrepreneur realm, another way to diversify is not putting all your eggs in one business basket. Do I have, obviously you want to worry about making sure one thing works, and we don't want to be divided and not paying attention, because that's not going to help anybody, and certainly not you. Manage your businesses, but as you're building your portfolio of businesses, how are we looking at these businesses in terms of exit strategy, building a business? What are we trying to do with the business when we build it? A lot of people talk about this, right? Am I building a business, or am I building a job? And I think that the tendency is for especially small business owners, they've built themselves a job. They've built them something that exactly what you were talking about before. I'm the breadwinner. My asset is I go out to work and I make this much money. Definitely along the example of the world's best widget maker, right? I'm the one that makes this widget. Without me, no widgets gets made. If I get sick, if I get hit by a bus, the widgets stop happening. We want to get to this place where the businesses are created without the business owner's personal interaction. How do we look at the businesses once we get to that point?
I'm not sure I fully understand the question, but
we were talking about stocks, and we were talking about the way to look at them. So apply that to the business, right? So we're looking at our business. We want to obviously think about, we've built it maybe from nothing or from very little initial investment, which is why a business can be insanely profitable, because you build it from potentially nothing to something that has much more value than when you started, right? Multiples of zero, infinite, right? But the idea that, okay, this is a business, this is an investment. So how are you applying that? And when you're talking to business owners, how should they be applying those principles within their business?
Well, I think I understand you now. So again, the answer is it depends on the business and the situation. And an example I could give is thinking about return on investment. That was a great point you made about low levels of personal investment in businesses that become highly profitable, where you're talking about a great deal of leverage from that initial input of money to a system that is producing lots of money without a whole lot of effort. Investors think about return on investment as the return on your own investment. And leverage to investors means borrowing money from a bank or a brokerage to buy more assets. Leverage increases return on investment because fewer of your own dollars are doing work to produce the growth that's occurring. And so that's a shift in mindset that a lot of business owners that I've worked with are uncomfortable taking without a certain amount of coaching and support. They don't want to take on debt because they feel it's better for their business to be free of debt. They're thinking like a household that doesn't want to have, you want to pay off the mortgage early,
and debt isn't free, so it's certainly a valid concern.
It isn't free, but it's an essential tool in creating growth.
I love it. Guy Vern Shattuck, part of Master Networks, he was saying, we were in a meeting, and he said there's two ways to make money in this world, and it's other people's talents or other people's money. And so when you're into that leverage space, you're using other people's money to potentially multiply what you're able to do with your business, right, over time.
Exactly right.
Yeah.
Exactly right. And it takes many business owners a change in approach and a change in attitude to think about taking on debt that is designed to produce growth, that will pay off the debt and then some. It seems like a risk to a lot of people, And yet, when you look at the dynamics of how that works in investing terms, it makes sense. And there's a bucket full of strategies and a long history of people doing this that people can refer to and say, oh yeah, I could actually expand my company significantly using other people's money. And some period down the road, a year, 2 years, 5 years, the business is going to be on a different level. How did I get there? I changed my mindset about debt, right? So that's just
And I,
one
and
of
I, and I want to clarify to this too, because I don't think what you're recommending is that somebody willy-nilly goes out and takes on debt within a company. You need to have a plan. You need to have, we're talking about exit strategy. You need to know where things are going, and you need to know exactly how that money that you're bringing into your company before it comes into your company is actually going to how it's actually going to turn results. Borrowing money just to fill the hole doesn't a good financial strategy make. Borrowing money so that you can expand and multiply the benefits and effects of what your company is currently doing is an absolutely wonderful thing. I think about restaurants that aren't profitable today and don't have a plan to be profitable tomorrow. Taking on debt, it's like bailing water into a sinking ship, right? You're not helping matters by building on more debt into a situation where you're already in a place that's not so great. But if you're able to run a small profit and you think money coming into your company is going to help you able to earn a bigger profit, and you actually have a plan for that, hugely beneficial decision. So maintaining the good credit, making sure that you're taking care of your folks that you owe money to. These are the things that help build a very successful business. I love that piece of advice. Ardal.
I thank you for that disclaimer, Cameron. That
Yeah,
was
yeah.
very, very important point you made. And I would underline again that any of the mindset shifts that I've been talking about and any of the ways of looking at a business in terms of an investment only work if they're part of a coherent strategy.
Right.
That's the key, is getting a 360-degree view of the whole enterprise and over a long period of time.
And I think that leads us to our final takeaway here, right? Transcending the business cycle and learning to think this way can clarify the roadmap to long-term financial success. So what would you recommend to folks that are running a business owners? What is the roadmap, whether they're thinking to sell the business or continue down the road? Because I think there's a lot of business owners, myself included, that aren't benefiting the way they would like to financially from their businesses. There may not be an exit strategy in place. They may not know what the road ahead exactly looks like, which from everything that you've been saying today, that's probably not where you want to be. You kind of want to know what the road looks like. Yes, it might go down a few different turns. There might be some unexpected twists, but you kind of want to know where that finish line is and what you're working towards. What are you recommending to people in order to make sure they're able to visualize that finish line? What does that finish line look like?
Okay, that's a great question too. A lot of great questions, Cameron. Thank you. So the answer to that is to build a team to support you. As I said, you definitely need a business CPA, a business attorney, and someone who does what I do. And they need to talk to each other. They need to know each other, and they need to know you. You need to take them out to lunch as a group, and get to know each other, because you can't develop strategies in a vacuum or out of a briefcase. It's done by human beings in the real world, and that takes personal contact. It takes time. And it isn't all done at once. You don't build a strategy and then put it in a drawer and forget about it. You have to revise it because things change. That's the only certainty in life and in business, is that the plans we make today are probably not going to apply exactly sometime down the road. We're going to have, there's maintenance required, revisiting them, changing those strategies in line with changing priorities, conditions, ideas, that kind of thing. So it's really an ongoing process. It's an interactive process, and it's a process that needs to move with change. But you need to have people you trust and people that you like to work with, and stay engaged with them. I think, does that answer the question?
Absolutely. I think, the building a team piece is really important. And what's the finish line? You got this team in place. And I think that, in terms of my understanding of this, I sort of get what you're saying in terms of the finish line looks like you've built a successful team, not only of people that can help you and advise you on the business owner side, CPA, business attorney, financial advisor like yourself, somebody that's making sure that you have retirement, making sure that you have put away money in places where you're going to need it, so that your future is assured. But team within your company, right? So that you can walk away, so that you're not tied to the business on a daily or even a weekly basis, that you can check in on your business. Not saying that anybody necessarily wants to be an absentee owner, but having the choice to check in or not, where a lot of people do not, right? They, if they do not check into their business on a daily, almost hourly thing, that means their business is being neglected. And so you want to get away from that. You want to build that team so that you're not looking at, that's what the finish line looks like. And then you're building this team that helps you with all the financial puzzle pieces so that you can map out the future and pursue the things that you really, really want to pursue, whether that's more business opportunities, more vacation opportunities, more grandchildren opportunity, whatever the case may be, right? Ardal, I think that was fabulous. Talk to me about where people can find you, how people can get in touch with you, and what you'd love to talk to them about.
Okay, well, I would love to talk to them, to take the last first, about their favorite subject, which is themselves and their businesses. You can find me at my website, ardalpowell.com. You can find me on LinkedIn, and you can ring me up. My number is on both those places, and I'm happy to speak anytime. I can send a link to my calendar that people can jump on, and we can find a mutually convenient time to talk. And it really begins with getting to know each other and finding out what it is that's important to the business owner themselves.
Thank you very much for that, Ardal. I really enjoyed the conversation today. I know for me as a business owner, some of the things that you were talking about today aren't necessarily new for me, but it's always good to revisit these things and then, do the deeper dive into the business stuff, because we get so busy running our companies and our businesses, and we forget to do some of these important steps in terms of building the team, looking at the financial roadmap, looking at our business more like an investment than a job, and not getting emotionally tied to it. So thank you so much for this. Everyone, please, and watching this, I hope you learned something. Definitely put in the comments if you enjoyed something. Ardal's website is down below there, www.ardalpowell.com. Please go check him out, set up an appointment, engage. I know from personal experience, he's wonderful to talk to one-on-one. You'll learn a lot. You'll get a lot out of it. Again, thank you so much for doing this with me, Ardal. I'll let you have the last word and say goodbye, everybody, and I'll play us off with the BizDev theme.
Well, thank you, Cameron. I've enjoyed it very much as well. You asked really great questions. I appreciate that. And thank you, everyone who attended. Please get in touch, and I look forward to meeting you.
BizDev Live, weekdays at 11 Eastern Time, live. BizDev Live, weekdays at 11 Eastern Time. Leadership and motivation, empathy and inspiration. BizDev Live, business development, not even selling it. BizD with C. Brought to you by Cameron T. Cameron T. Biz D with C. Brought to you by Cameron T. Cameron T. This is business development, not even selling it. Not even selling it. Not even selling it. This is business development, not even selling it. Business development, not even selling it. Biz Dev Live. Biz Dev Live. Biz Dev Live.